Why are home prices so high? Hi, I'm Richard Vague with Tycos. A key source of discontent among voters and of political disruption is the increased unaffordability of houses. It's perhaps as big a factor in our difficult political landscape as any. This can be vividly seen in the ratio of house prices to income among major developed countries. Let's take just three: the US, the UK, and our good friends and allies in Australia. Since 2000, that ratio has increased from 107 to 127 in the US, from 73 to 103 in the UK, and from 68 to 120 in Australia, an almost unimaginable jump. In the US, the new tariffs are adding to the problem by making new home construction even more expensive. It all has more folks opting for adjustable rate mortgages again, with the risk implicit in that. If you know our work, you know we would normally ascribe this type of ugly increase to an increase in mortgage debt. After all, increases in debt are almost always the culprit in asset price increases. And over the decades, that certainly has played a huge part here. But more recently, we've seen a different factor emerge as dominant. Looking at these three countries, since a peak in the GFC in 2008, the U.S. ratio of household mortgage debt to GDP has fallen from 73% to 44%. In the UK, it has plunged from 77% to 56%. And in Australia, it's climbed, but at a flattish pace, and now at 88% is only 10% above its '08 level of 81%. So we need to look elsewhere for the culprit, and that elsewhere is the simplest and most obvious place of all: the supply of houses itself. And in fact, this conforms to the most obvious way you would think about economics. If supply is low, prices go up. Let's look at how few houses are being built in these three countries as compared to the recent past. In the US, it has fallen to half of the pre-2008 level. In England, the amount being built was actually fairly healthy until the gut punch of COVID. In Australia, the amount being built has been tumbling for 20 years, but saw a notable extra dip due to COVID. The result is a record low inventory of homes for sale. In the US, the level is 60% below the pre-08 level and still 20% below the level we would count as normal by historical standards. In the UK, where we have to interpolate a bit, it is almost 50% below the pre-08 level and well below what we would consider a healthy level for that country. And especially in Australia, it is 30 to 40% below healthier historical levels. The lack of inventory alone puts a major curb on sales, so it doesn't take too sharp a pencil to understand at least one big part of the reason why house prices are so high. There are simply too few houses for sale. It's the textbook result of a supply imbalance. So why is the supply so low? COVID knocked a hole in the housing supply, with dramatically fewer homes built for the obvious reason that building was restricted, as most countries have yet to overcome that deficit. But the biggest factor is high interest rates, which themselves are a function of COVID. COVID brought a decimation of supply chains and widespread shortages across the board, which of course brought an ugly but short-lived bout of inflation, peaking at 9% in the US, 10.5% in the UK, and 7.9% in Australia. It was over. Inflation was effectively over, or high inflation was effectively over in all three countries by late summer of 2022, as supply chains were largely repaired. But central bankers who were slow to increase interest rates are now even slower in lowering them. In the US, short-term rates reached 5.3% and are still at 3.9%. In the UK, short-term rates reached 5.5% and still at 4.0%. In Australia, short-term rates reached 4.4% and are still at 3.6%. Further, and perhaps more importantly, in the US, mortgage rates reached 7.2% and are still at a very high 6.2%. In the UK, mortgage rates reached 6.9% and are still at 5.5%. In Australia, mortgage rates reached 6.8% and are still at that same 5.5%. And there's a new factor on the rising, putting upward pressure on rates in an arguably inopportune moment: the new U.S.-led regime of high tariffs that by definition make prices higher. So who are the principal victims of these high rates? Well, it's all three of the constituents in this triangle of home buying and selling. It's the home builders, home sellers, and home buyers, all three participants in this really important equation. Home builders build less because of the high rates they have to pay on their construction loans. Home sellers are very reluctant to sell because they will be giving up a very low rate mortgage and will have to take out a high rate mortgage on the new home they purchase. Buyers will get a double whammy: high mortgage rates and high home prices because of this very same factor of a low housing supply. There are, of course, other factors at play here, but we submit this three-party vicious cycle is chief among them, a lingering product of the global COVID pandemic. What would I do if I had a magic wand? I would do those things necessary to bring lower rates generally, since, being an empiricist, I'm not one of those that believe lower rates will bring high inflation in a developed economy. And further, I would provide some form of short-term relief or subsidies in some form to each of these three parties: home builders, home sellers, and home buyers, and do that for a period until these imbalances are overcome, which would probably not be that long of a period, a year or two. Home building and home buying combine to form the biggest non-government component of the economy. So if you boost home buying and home selling and home building, you've kick-started a country's entire economy and made a lot of businesses and households happy along the way. If I were Rachel Reeves, the beleaguered Chancellor of the Exchequer in the UK, who can't seem to get out of her own way, this path would seem a pretty obvious solution. In our view, it's a set of programs that would readily pay for themselves. The same goes for Australia's Jenny Wilkinson and even U.S. Treasury Secretary Bissett. A short-term set of incentives here would be a win-win-win. Every once in a while, there are economic solutions that pretty much work for everyone. That's it for this week. Thanks.